Welcome back, guys. Welcome back. It's that time of day again here, 7:35 Eastern Time. Time for our crude oil morning prep. We're going from Los Angeles at the screen all the way to New York City on the floor of the NYMEX exchange. My name is Joseph James. I'm a technical analyst from School of Trade. I'm here with Marty Errico. He is a pit analyst from Traders Audio. Together, we're going to provide you with a very unique screen-to-floor morning prep for crude oil futures this morning. And of course, I'm going to begin as a technical analyst looking at a top-down approach. I'm going to analyze overnight, London. We're going to start with a much slower time frame and work our way down to the faster time frames. My job this morning is pretty simple, guys. I'm going to try to anticipate direction at the open and anticipate those high percentage trades starting at 8 a.m. Eastern Time. It's a very simple theory, guys. Top-down approach. We'll find out what the big picture says first. We'll find out what the small picture says second, and then we're going to toss it all the way over to Marty. Now, Marty's going to be all the way on the other side of the country in New York City. He's going to provide us with some pit analysis, and I think this is extremely valuable for all you screen traders out there. Marty's going to take a look at what he's seeing on the big board in the pit. He'll use some of his experience at seeing what's happened in the past to anticipate the future. We'll be looking at market direction, divergence, internals, options, and of course we'll review all of the important price levels that those pit session traders will be watching this morning as well. Guys, it all gets started here this morning. Let's jump right on into it. First things first, we'll head on down to some charts and let's prepare for what the day has in front of us this morning. Now, of course, crude oil futures are always susceptible to geopolitical events, economic news, all that fun stuff. So the first thing we'll do is we'll check out the calendar for today. The calendar for this morning here in the United States doesn't look too busy. We got not a lot on the schedule this morning for a Tuesday. Now remember, last Friday was non-farm payrolls. We had to suffer through a morning of no news on Monday. We have a second morning here in a row of no news. We do have a little taste of some news here. We've got that brand new JOLTS report out at 10 o'clock, and of course, everybody's heard of the wholesale trade report. Those are two very, very small reports. I would say the most important thing right now is coming out of China, news that we heard over the weekend. We are still getting that mulling around and investors trying to figure out how they're going to be handling the news coming out of Asia from last week. Looking at the calendar here this morning, there's not a lot for us to talk about. We will see a late day API report from crude oil futures, so we will see a late inventory number. What's that, 4:30, 4:15 Eastern Time? That'll be released. We're going to be watching that headline number tomorrow, though. Tomorrow is Wednesday, so of course Wednesday we know is indeed our big day for crude oil traders with inventories. So no major news this morning on the calendar. Now that we've got the news under control, let's begin taking a look at a 60-minute chart. Now, a 60-minute chart, in my opinion, is one of the most important charts you can watch for an intraday trader. As we tell all of our students in our live trade room, which opens up at 8 a.m. Eastern Time, Monday through Friday, in our trade room, we talk about how if we can find trading opportunities that leverage the 60-minute chart, then we have the best, right, the highest percentage trades we're going to get. I want to trade with the trend. I want to trade using the major support and major resistance levels that we see here on this 60-minute chart. Now, at the beginning of the week, we took a look at the dailies and the weeklies. Here, as we go into the middle of the week, we're not so concerned about dailies and weeklies. We're looking for price levels right now. And what do we see on this 60-minute chart? There are a couple things that just scream at you. What are they? I see three big things that tell me clues right now. First clue is, yeah, you got it, the bull channel. The bullish channel tells me without a doubt that buying is going to be the highest percentage trades we're going to see here today, right? The bull channel tells me without a doubt I've got to look for longs, got to look for buying opportunities. We know that buying at the lows of a channel is always going to be the best bet, but we also know that if we happen to break out of a channel, we know that we've got quite a bit of support below us, which we will use for price reversal locations that will get us into buying once again. So the first clue we see is the bull channel. The second clue that we see this morning is this price wedge. Look at the price wedge lining up, drawing trend lines. I'm always a big fan of trend line analysis. We're going to draw trend lines, as I always say, find a peak, find a valley, find the highest high, find the lowest low, and then move your way towards price. So we find lower lows moving towards price. we find higher highs, then moving towards price. And of course, you can see here, lower highs, higher lows, those lead to a price wedge. What does a price wedge tell me, guys? A price wedge tells me buy the lows, sell the highs, avoid trading in the middles, right? Price wedges tell us indecision. Price wedges tell us beware of the fake out breakout. And if this price wedge is combined with a bull channel, we now know this price wedge is a bullish wedge. So what does that tell me now? That tells me now I'm looking to buy the lows of this wedge, just like I want to buy the lows of that channel. Second clue this morning, second clue, I want us to take a look at the major support levels we have here at 93.98. 93.98, well, it's only a hop, skip, and a jump away. We're at 94.67 here. You know that crude oil, that black gold, loves to move quite a bit in each day's session, so we know there's no real guarantee, but we know that 93.98 is definitely within our striking distance today. Wouldn't surprise me at all to see price blow right through this, bounce off the 94-ish area, and then start to head right back up. If we do head back up, we will have to use these trend lines. In this case, it'll be as resistance on the way back up. So don't forget that trend line overhead. That will make for an excellent profit target as we rise off this 93.98 on crude oil this morning. We've got first clue, bullish channel, tells us to buy. Second clue, price wedge, tells us to buy or sell with a bias to the long side. 93.98 gives us an easy level to look for if price collapses this morning. See what I'm doing? I'm preparing here now for the upside, the downside, and the sideways. Remember, guys, markets can move in 3 different ways. What if they move up right now? What's my plan this morning? If price moves higher this morning, I'm buying pullbacks. Why? Because the bias from the channel tells me to, because the lows of the wedge tells me to, and we know that we have a very high percentage trade whenever we're buying at support with a bullish trend. Now, if price goes sideways, if price trades sideways here, I'm sitting on hands. If price moves lower, that's the final scenario. If price moves lower, we are going to have a difficult job selling short. It's very easy to see that these short sellers are going to have their work cut out for us. We have buy zones here. Buy zones, what are buy zones? Buy zones are what we call demand zones, right? These demand zones, these buy zones, these green boxes below tell me that this is where we expect to see demand enter the market. This demand may come from shipping companies gobbling up all the crude oil futures they can find to hedge against higher prices. This may come from gas producers, right? All of the producers of crude oil, right, they want higher prices. So they're going to be, of course, leveraging or hedging against lower prices. So as price falls, you're going to see people who consume crude oil start to gobble that stuff up. All righty. Now we've got the 60-minute chart looking good. We're bullish on the 60-minute. If we happen to fall, we know we have to be patient this morning. I'm going to be looking for reversals at 94.48, 94.15, 93.88, and of course we already talked about 93.98. Those are all the levels I've got below us. Remember, guys, we're not going to predict. We're going to wait for price to start to make that move higher. And once it starts to make that move higher, if you're a member of mine, you've got your entry trigger indicator, you've got your trigger zone tool to make sure that you get into the proper entries that are low risk and high reward. And then don't forget, guys, the top of that wedge is begging you now as a profit target. So use the top of that wedge as a profit target here for all of our buying opportunities this morning. We're not done yet here, guys. Let's move over now to a 5-minute chart. The 5-minute chart, in my opinion, is most likely the most important chart that I can use. And this 5-minute chart is really screaming at us a lot of important clues here. The first clue that I see is the London trading session. Look at the size of this session. Now, you may not think that's a very wide session, but if you've been watching this broadcast for more than a few weeks, you've seen quite narrowing of this session over the past 2 or 3 weeks of this two-sided trading. This was a nice, welcoming sign this morning, wasn't it? We haven't seen something like this in quite some time. What does a wide trading range tell me? A wide trading range tells me one of 2 things. First of all, it tells me, I'll bet they're exhausted. Let's look for a price reversal. But remember, this is crude we're talking about. Crude's got a mind of its own. This market may also be a runaway, right? This may also be a runaway market. So when I see a wide London trading range, the first two things that I think of is, I'll bet these London traders are tired. Man, they've been working all morning. The second thing I think is, well, maybe there's a reason for it. Now, I'm not a big proponent in analyzing the news. I want to know when the news is. I want to know when the news is coming out so I can avoid it. I'm not going to recommend a new trader digs into the news to try to figure out why this price is moving this way. All we trade is patterns. We don't trade the news. So while all the rookies are worried about why, I'm looking for when. I'm looking for when that pattern sets up. Do I really care what the reason is to get long? No. Why would I? As long as they deliver the check to my office on time, I don't care. I don't care what the reason is regarding the economic news that pushed it down. What I do know for a fact, though, right now is that if we zoom all the way out, I've got some serious daily support here at 94.74. The fact that we have closed now below that support tells me that this is a bearish sentiment this morning, as if we couldn't tell already by the lower highs and the lower lows. So we see we have a bearish sentiment going lower because we have, of course, closed below that 94.74. That doesn't tell us anything more, though, than what we already know. We already know that we've got a bearish move lower. Now we're waiting to see where we get that reversal. Now, I have some pretty important levels here to be watching for here, guys. As we go lower, I've got additional daily support. Members, if you're on the call right now, this 94.29, this is going to be your daily trigger zone number 2. This is from yesterday's low to high. This is trigger zone number 2. So we've already broken through trigger zone number 1. I would say we're not quite through it just yet, but I am going to be looking for any of these levels below me to act as a reversal. So we see here as price goes lower, we would have hoped to take the reversal out of the daily reversal zone. We didn't get that. That's okay. Now we're into the reversal zone. This is the London reversal zone. We will be looking for price to rise higher out of the London reversal zone. I have levels at 94.64, levels at 94.31, levels at 94.02, and at 93.89. Really quick, I do want to point out as well, as we go lower, make sure you guys can see all the levels we have as we go lower. If you're keeping track at home, boys and girls, I've got 94.64. I'll be putting these up on the blog, by the way. 94.31, 93.89, 93.42, and of course, just in case we get that home run, 92.67. This is always an exciting reversal point for us on the way down. What I'm looking for is, based on that 60-minute wedge that we saw, based on that 60-minute bullish channel that we saw, I'm going to be patient this morning, looking for a price reversal at any of the levels below me that I've mentioned so far. Once we see the price reversal, then we know those sellers are beat, and then we'll begin to buy those pullbacks on the way up. Don't forget, there is that trend line overhead, and that trend line is the exact same scenario that we saw on the 60-minute chart. We do want to be aware that trend line will have to be used as at least a partial profit target, and I would always recommend, if you're trading crude oil, you got to leave a runner, right? Got to leave a runner because you know this baby likes to run. Now, we know the levels to the downside now. And again, I'm going to put these levels up on the blog later on this morning here once we're done. What if we start to rise higher? If we start to rise higher, members, I've looked for trigger zones using the major swing high and the kind of sub-swing high, right? The minor swing high. So these are the two hot levels that I'm using here along with today's low of day. With that comes lots of resistance overhead. As we push higher, we're going to run into, and I'm going to use these as partial profit targets if you're scaling out of your position, or full profit targets if we are just using one contract. In our live trade room, we specialize in one contract trading. So remember here, guys, assuming we don't make this lower low, it looks like we might here though, if we make this lower low, we will have to move these down just a hair, but I will have overhead resistance here piling up on top of us as we go higher. Right? A lot of easy to see swing highs up there, which will cause us to use, and again, what I'll do is I'll go in and grab my Fibonacci tool and I'll update these and put these on the blog if we make that new lower low. We have the previous low of day here, 95.19. Members, don't forget the inside out pattern tells us Look to get long back above that 95.19. As you can see, though, we're going to have a very difficult time doing that depending on when we get back above it. The ideal scenario would be later on in the session this morning, getting back above that previous low of day so we can get long again, but breaking above that trend line, which will be acting as resistance. What is all this stuff telling me here, guys? The 60-minute chart tells me that at any minute I can see a price reversal. Any moment I can see a price reversal according to my 60-minute chart. My 5-minute chart now tells me exactly the levels that I'm going to be excited to look for those reversals to occur. Don't forget, guys, know your risk tolerance, know when the news is this morning, and come out and join me Monday through Friday as a member during our trade room at School of Trade. It starts at 8 o'clock in the morning, Monday through Friday. That's all you get from me today. I'm looking to buy here with the reversal. Marty, what are you seeing over there, my friend? Am I totally off my rocker this morning, or what do you think? Am I on track?
There we go. All right. Alrighty, guys. Good morning to you. Well, I'm looking for a buying opportunity as well. I'm looking for a pit session opening bell above these 94 halves, above the 94 evens to get a little buying opportunity. We know about the fact that we saw the 94.10 was a pretty important level that we were looking at in terms of just on the way down, on the way up earlier. So, of course, on the way down, it's going to be a pretty important level. Now, if we could stay above 94 even, 94.10, and 94 half this morning, open up above it, I'm looking for a buying opportunity to take us all the way back up towards the high prints, just about up to that 96 even. So, short term, looking for buying opportunities today, and then into tomorrow we'll be watching what happens tonight for the API numbers, of course. But bottom line today, we're looking for an opening print above these 94 evens, 94.10, 94 half level, right? And then we're going to be looking to buy. So this morning so far, our indications are just pointing a little bearish at the moment. Well, I should say bearish across the board this morning, really, at the moment. I'm looking over here now at your RBOB. I'm looking at your heating oil, looking at your crude. We're all down by about $1 to a couple pennies here. Volatility starting to firm up just a bit. Again, we've been seeing lower volatility the last couple of days. We've seen locals in the pit, short volatility, selling puts and buying calls, which are bullish plays at the moment. And that's basically been the trend. Now we're starting to see volatility come up just a bit now, up to 22%. Again, we're up 2 vols from yesterday. On top of that, we're starting to see these spreads start to tighten up as well here. Again, the spreads were kind of wide up at those highs, so that's what really was that was a good indication that we were coming off of those high prints yesterday. We were able to look at the spreads and get a good idea that we were coming off these high prints, right, in the overnight session. And now all of a sudden, here we are, and we're watching Brent in the London session trade around 102.40, 102 half, and now we're looking for a potential reversal. Simple as that. So the spreads are screaming, yes, there will be a reversal. I'm looking at the Brent WTI spread down to about $8 here, which is rather tight this morning by about 33 cents. The calendar spreads are very tight this morning as well. I'm looking at your July to Augie, just about 23 cents, rather tight to unchanged. I'm looking at the, as you can see here, July to SEP. Bullish. It's tight on the day, which is also bullish. And then I'm also looking at your July to OC and July to Novi at the moment. Again, these are all tightened up by about 22 cents, 23 cents, and 32 cents. So look at this. It's all bullish on the spreads. Obviously, a sideways range we're in. That's why on the crude we have the arrows indicating sideways type activity. Even though it's lower, we can see us buy the lows and then trade back up towards the highs, or at least up to the 95 half, 96 even type of level. So that's what we're going to be watching for in your crude. So far here, your dollar is trading a little lower here now this morning as I'm watching in the European session. Your dollar down by about 50 points or so today. The DXY down almost, DXY down about 50 points. The dollar index down about 25 points or so. 81.64 evens. Again, yesterday it broke back below the 82 handle, back into the 81 handle, and then we drifted lower for most part of the day. Even though the dollar was firm in the beginning of the day, then it kind of drifted lower after being firm all morning. So yesterday in the pit, we saw a very, very, very slow day in the pit. I mean, very slow. We saw, like as I mentioned, we saw locals pretty much trade in the morning taking the other end of paper trades. Paper were net long, as you notice. If you look at the pit chart with me, you'll see that we had a pop in the morning. Crude made its highs in the morning and then didn't really sell off. It just kind of traded in a 30-tick trading range and flattened out just a bit. So you see these guys who were getting long in the morning, they didn't get out of their positions necessarily, right? So that's something that we have to consider. Okay, so these guys are kind of net long. They haven't gotten out of their positions. We're talking about the bigger dealers. The locals, they kind of just nickel and dime the market like usual, and they did get out of their positions. But the dealers, bigger guys, hedge funds, speculators, so to speak, they didn't get out of their long positions. They stayed in all day. They stayed in, and then we were in a 30-tick trading range. So that's something to keep in mind. Volatility was in as well. We saw volatility go down about 2 vols to 20%. In the back months, we saw about volatility 1.5% in, so that's something that we have to keep our minds on. Let's also talk about what else happened in the pit in terms of just strike levels that traded very, very light in terms of strike levels. We saw 1,000 lots in July 95 halves. They bring them up to Augie 100s, Augie 102s. We also saw some put side activity trade as well. About, let's see, 94 halves and 93 evens on the put side, but especially that 91 put as well. Only 500, but again, at least they sure up some downside risk. So you can see they also placed a little bit of money in the 97 half put as well. So those are the puts, all 1,000 lots, as I mentioned. That's it. Very light debt. Usually we hear, 10,000, 7,000 lots. Yeah, very light, only with the whopping 1,000 lots coming into play in the market today. Or yesterday, I should say. So that was really it in terms of pit activity. I mean, very light and slow yesterday, but we can definitely look today. Lower trend in the morning, tend to reverse in the afternoon, and this morning again. I think the JOLTS number could be a potential market mover. Last week or last month when it came out, it was a new number, so a lot of speculation, and it did move the market just a bit. Keep in mind there are some tensions going on in the Middle East as well. This morning we have Iranian elections as well, and Iran, they're going to be having their elections in the middle of this week on Wednesday. API numbers tomorrow, APIs tonight, DOEs tomorrow, so we're going to watch those APIs. As, man, weren't they a great leading indication on the DOEs last week? I mean, damn, that was great. All right, guys, let's talk levels here, as those are all of our geopolitical news events that we're watching out for today into tomorrow. Crude yesterday, pit session high, 95.97. 95.97, your high. Your low, ladies and gentlemen, 95.19. We have closing and settling today at 95.80. Today, your daily pivot for the pit session is going to be 95.65, which we are trading below at the moment here. Let's start off with that support here down below. Support below, 95.33, right? 95.33, 94.87, which we are below, and 94.09, which is awfully close to that 94.10 and 94 even level. So I think that's going to be our reversal point if we can open above that level. So we'll watch out for that. If we open below that level, sideways chop trade, and it really doesn't give us much indication because these are the levels that the guys on the trading floor were talking about this morning. Let's talk about resistance above, ladies and gentlemen. I got 96.11, 96.43, and 97.21. Those are our levels of resistance above. Open interest currently stands at 213,309. Once again, 213,309 is going to be your open interest with volatility, implied volatility yesterday trading around 20 bucks, the OVX 21.75, and as I mentioned now, implied volatility ticks up to 22%, so you can see the change there, up 2 vols now we are. As we talked about the large strike levels in the pit, as you can see, those were the large strike levels that we were talking about, all 1,000 to 2,000 lots, very light. So we do have some support at 94.41. We're kind of breaching the 94. Basically, the big support zone is going to be 94 even the 94 half, just to kind of put it into perspective there. That's where we're looking for potential reversal, with the resistance above at 96.35. So that's going to be our resistance above that we really, really, really need to watch. Bottom line that we can get up to. All right, let's talk about natural gas real quickly here. I'm just going to pull up a quick chart. You can still see we do have a bearish-like sentiment in natural gas. We are going to keep on watching for lower prices. We basically have a nice level of support at 375, and that's basically support that traders looking at in the outright pit and also in the options pit. So one more time, 375 is what we're going to be watching for. So we're looking for lower prices. We are bearish. We're waiting for, obviously, inventory numbers coming out in the next couple days. Baker Hughes rig counts were out the other day, and we're looking for bearish type sentiment in the natural gas market. Now, there was yesterday in a weather report that did push the market up slightly, but then we ended up fading that weather report, and we ended up fading that number because we hit into a big level of resistance, which was our daily pivot yesterday, and one of the levels that I gave you. And then our low yesterday was the level of S3. So that's exactly where we turned around. That's exactly where they turned around and bought it, and you could have gotten into a long and would have had that 50% retrace from the 377.90, which was our level from yesterday. So if you go back and look, you'll see that was our level, and these levels are like magnets on natural gas. So as I was mentioning, we are looking, so we did get that warmer than expected weather in one of the forecasts, 6 to 10 day that was out and published. The market did rally off that, but then slowly faded off that and went into the 377.90. So we can expect to watch natural gas still trade lower. After its inventory number, I think possibly we'll get a draw, or at least not as high as a build than last week, and we will get a little bit of a bullish reaction, bring us up to the 385s, and then we can resell the high end of that channel that I was showing you guys yesterday. Alrighty, guys, high in natural gas pit session 386.80, your low 377.90, close and settle yesterday at 380.40. Net change of about 4 cents to the downside, which was 40 ticks lower. We had an ultimate range of about 9 pennies, which is 9 cents, which is about 90 ticks, and our daily pivot today is going to be 381.70. Implied volatility sits at about 30% or so. Vol index is 30%, with your support below 376.60. I got 372.80 and 363.90. Resistance above 385.5, 390.60, and 399.5. With large calls and puts here traded, guys, this morning. What large puts and calls traded yesterday, there was a lot of interest in the $4 strike level, about 2,000, and then in the 390 put, there was a lot of, obviously, level in the 390 put. There was also a little bit of interest in that 375 call, which was giving us that support. 375 calls. We're also purchasing the pit pretty significantly, so that's where our support can come in at 375. So, guys, that's it for me. Again, bottom line on crude, we're buying. We're looking for a reversal here. We're going to buy up, and on natural gas, we're going to continue to keep on selling here, guys. So that's it for me. Have a nice day, and I'm going to throw it back over to Joseph James.
Thank you, Marty. Appreciate your time today. Thanks for braving the elements for us out there in the NYMEX exchange. Boy, I feel spoiled sitting here in my ergonomic chair in my comfortable, well air-conditioned home office. Boy, Marty Errico, guys, from Traders Audio. Thank you very much there, Miles. Thank you, Sammy, for coming in and seeing us. Thanks all of you guys for coming out and joining us here this morning. We are just about to roll out this product as a full-time morning prep every single morning at 7:30 a.m. We've been in beta here for the last few months, and we're just about to roll up our sleeves and make this a full-time product. We'd love to hear your feedback. We'd love to hear what you like, what you don't like about it. We'd love to hear what you see value in and what you'd like to see added or removed from the presentation. So don't be shy. We have a blog that we have for this call each morning. This blog can be found right on our website at sidewaysmarkets.com. I would encourage you guys to head over to the blog, check out the crude oil squawk and prep Monday through Friday, 7:30 a.m. Leave us a comment, send us an email. Let us know what you guys would like to see added or removed from this call. And no, you can't say remove JJ, okay? I'll tell you that much. Those will be deleted. I'll tell you, I'm kidding with you guys. Anyways, I'm JJ at School of Trade. That was Marty at Traders Audio. A little more cowbell. I think we could deal with that too, Steve. I like that suggestion. I like that. Always good to have you guys here today. We'll see you guys in a little over 23 hours from now. We'll see you guys back here at 7:30 a.m. for a Wednesday morning edition of our crude oil morning prep. Thanks for your feedback. Thanks for your support, and we'll see you guys tomorrow. Remember, guys, you got to learn it so you can earn it. Adios, amigos. Bye-bye for now.